The second largest bank crash in U.S. history happened within days. The Silicon Valley Bank closed and was taken over by the U.S. FDIC before it collapsed. It is the 16th largest bank in the United States and had assets of more than $200 billion last year. It is the largest U.S. financial institution to fail since the height of the financial crisis nearly 15 years ago. So what really happened and how did we get here? All started last Wednesday, when Silicon Valley Bank announced that it had sold a bunch of shares at a loss and would sell another $2.5 billion worth of shares to shore up its finances. Now this has caused some panic, because if the bank already has enough money to cover everyone's deposits, then why does it need to raise more money? And the simple answer was no, which caused the bank to run away. As you might guess from its name, Silicon Valley Bank is full of tech startups using it, and when the news broke on Wednesday, a team of VCs began trying to contact the companies, their parent company, to withdraw money. Because if you try to think of both outcomes, at best nothing happens. In the worst case, you will lose all your money, so you better be careful and try to withdraw your money. This cause is an absolute critter in the stock price. It dropped more than 60% in a day, then 20% after hours. On Friday, the stock went down and the FDIC decided to take over the bank. Silicon Valley Bank has been trying to find a buyer. It tried to raise more capital. Both attempts failed. And it is interesting to note that this is also the fastest performing bank ever, as we can now withdraw digital money. In the past, people had to go to the bank and try to withdraw money, so it took longer. The FDIC guarantees deposits up to $250,000. Unfortunately, only 2.7% of the total deposits were under $250,000. This is terrible news for many tech startups. Most of these companies won't be able to pay their salaries next week, and who knows how long the FDIC will actually take to sell all the assets and try to get their money back. The CEO of Y Combinator, Gary Tan, quoted this quote, "This is an extinction-level event for startups, and we will put startups and innovators back a decade or more." It really shows that nobody knows what they're talking about, because even up until the last hours, before the FDIC said they were going to take over Silicon Valley Bank, that they had failed. Famous founders, prominent VCs, and many others are now in the tech industry, say it will not be like 2008. This time is different, and the possibility of contagion will not spread to other banks. Right now, the impact seems limited to tech startups, but we'll see what happens in the coming weeks and months.